Today, we're going to be talking about something that everyone needs to know if they're investing in commodities and gold and silver and mining stocks. How are these supply chain disruptions and these changes in the economic and political environment going to affect mining stocks? And what can you do to ensure that this is an incredible time to be investing in these commodities? We're going to be discussing that with Marin Katusa. He is one of the largest financiers in the natural resource industry today and one of the most successful commodities and natural resource investors. So make sure you hit the like button on this video. Give us a comment down below. We'll link Marin's website right there down below. And we want to thank you for joining today's episode. And it's good to see you.
Thanks. My pleasure.
So you and I were talking off air, and we were discussing the supply chains and the oil, and you were saying that all of these types of things are really going to change the environment for investing in natural resources. And I thought that'd be a good place to start. What is it that people are unaware of and that they aren't being told that's going to be important in this next cycle of commodity investing?
Look, a lot of people don't like my message, and too bad, so sad. It's the reality. The deglobalization that's happening. You look at, what Europe, London, for example. I was telling you about my buddy who spent an hour and a half looking for gas, and then he spent over half an hour in lineup finally when he found it. That's going to resonate with the locals. And when you start going to places like Chile, Argentina, Turkey, Peru, the DRC, where billions upon billions of foreign capital was brought in to extract resources, gold, copper, silver, and it was set on this predetermined royalty rate. And now when people can't get stuff, and then there's a shortage for US dollar, even though the US dollar is, all fiat currencies are doomed in the end, it's still the king of all currencies. And when there's going to be a shortage of these US dollars globally and competing for these resources, look, China openly just sent all of their national oil companies to get all barrels at all costs. Now, it's not a supply issue right now. Sorry, it's a supply issue, not a demand issue. So you see all these bottlenecks going around, and this is going to set the stage perfectly for the domestic ministers, the politicians, to step in and start increasing taxes on these foreign companies, increase their royalty rates, increase their ownership. And you look at simple things like a lot of people don't realize that if you invest in a country, you can't just take the gold out, or you just can't switch your bank account for your US dollars. You got to exchange it at the government rate on FX. You take a place like Turkey, great potential, but it's just starting to come down. And why? Because they need US dollars. And do you think Erdogan cares about some American investor in some company when you have these FX rates? And it's shocking to me. My background's math, and I manage some of the biggest names in the business of money alongside mine. I've been partners with some of the biggest names in the business. It's shocking to me that in our industry, the banks and the analysts and all these things are not pricing this risk properly in. So you're going to tell me that you can put the same discount rate somewhere in DRC or Turkey as Nevada or Quebec? Not a chance. So make sure you know what you're investing in and what the political risks are, and not just the political risks, the environmental risks, and then the FX risks. How do you get your money out of that country? You look at what's going on in Mongolia, Turkey, Argentina, the exchange rates that you and I could get, where you live, in the bank rates versus what these companies get from the government set. These are two different realities.
Now, how would this type of, clamp down, or move towards more of this type of nationalization of these commodities, would that have a continued effect on supply chains?
Totally.
Yes.
Totally, big time. And it's just starting. Like when you have the environment minister and mine minister of Argentina talking openly about how the American and Canadian and Australian companies don't mine at the Argentinian level of environmental standards, they're going to use the environment as a cause. It's all bullshit, but they're going to use this stuff as a reason to go and extract more value out of these companies to increase the government ownership, to get more money, meaning less money for the foreign investors. And it's a trend that's going to continue. What are the two guaranteed things that a politician is going to do? Lie and increase taxes. So expect that.
That's funny. So one of the companies that that we've covered on the channel we've done, very well with. I think we're probably one of the first channels to cover them was Gold Royalty Corp, G Roy, with David Garofalo at the helm there. I think we profiled them. I think the first week they went public, and one of the names that I mentioned was you and Rick, and I believe Doug were all invested before they went public. And so, just curious, how have you felt today? I mean, obviously they've had an incredible move. What got you interested in G Roy, and what do you kind of see coming down the line? I have to admit, I have to believe that you're pretty happy as a early investor. They've had quite a nice run.
Not just that, I've added to my position. So there's a reason why Rick Rule and Doug Casey, Ian Telfer, Eric Sprott, Jimmy Lee, Rob McEwen, some of the biggest, most successful investors have all backed this management team. David Garofalo is the real deal. Most in the mining business, I don't know how long you've been playing this game, but most people that run these companies are fake it till you make it. These guys have made it and they're making it again. There's a big difference. They're not spreadsheet jockeys. They're not former bankers who are essentially added no value to the industry chain of value creation for shareholders. David Garofalo and his team have built mines, world-class mines, from his days from Agnico Eagle, which now is one of the world's largest producers of gold in the world. And mind you, what's the focus? Political stable jurisdictions with long life, low cost ounces. Then he ran Hud Bay. Then he ran Gold Corp, then merged that Gold Corp with Newmont, became the world's largest gold producer. This guy didn't need a job. He did it because he wanted to make a difference and he saw an opportunity in the market. When I sat with David before I wrote a very large check, along with Rick Rule and Doug Casey and Ian Telfer, who's the founder and godfather of the streaming business, I said, David, why are you doing this? You don't need to do it. We don't know each other too well. We know of each other. We've never done business together. My style, I've got a few nicknames in the business, but I'm not the most likable guy in the business. I don't give a shit about being liked. I care about making my subscribers money. That's all that matters in this game, doing it right and making money. And he said, Marin, I see a multi-bagger opportunity here, and this is what I'm going to do. David hasn't just done what he said he's going to do. He's done it at a faster rate of change. My background's math. When someone starts talking about they're going to do this and that, I've been around this game long enough. You just start, I hear music in my head and I can't wait to get out of the meeting. This guy is doing it faster and he's going after it and he's getting guys like Eric Sprott to back him. When Ian Telfer, just to give you a little bit of background, when Ian Telfer started the streaming business with what today's called Wheaton Precious Metals, it's a $21 billion company. He had to get out there and explain to people this model. Ian Telfer knows this game better than anyone, and he's chosen David Garofalo to back both with his money and time. A guy like Eric Sprott, and you wanted some cool history here, when Ian Telfer started Silver Wheaton, which today is called Wheaton Precious, but back then Silver Wheaton, the world's largest streaming silver company. Eric Sprott was the world's number one silver guy. He wouldn't invest in it when he started. He said, I don't understand this business. I'm not going to do it. Fast forward 6 years, Eric Sprott's number one recommendation in the business, Silver Wheaton, right? So guys get along. Now you've got this one company that is going after and doing exactly what they're saying and backed by Eric Sprott, Ian Telfer, Rick Rule, who's probably the most, I call him the Mark Twain of the resource sector. He's the most eloquent, probably one of the most experienced investors in our game. I had the benefit of being partners with him in the fund. The only thing he's ever done outside of Sprott. He's been a great mentor. Doug Casey, Jimmy Lee, which people don't even know. These are super smart guys that have been around the sector for 40 years. They're doing this because they know the players. They're capable. These are mind builders, and now they're able to navigate this world. They know what it takes. They're not using consultants, and they're not going to places where your FX, where your profits are going to be manipulated by the government. They're in Quebec. They're in Nevada. And both those two places are the top two places in the world to invest. That's not Katusa's opinion. That's the actual government rankings for mining. It's a guidebook that gets published, and it's a fact. I've been there and done it. I've traveled to all these countries. I remember Doug and I going to Iraq and the DRC and Argentina and all these places, and you sit there going, even if you do build it, the politicians are going to screw you somehow. In Quebec, in Nevada, the politicians can't do that. So you got the number one and two mining jurisdictions in the world, the infrastructure in place, the power. People forget what's going on right now. You're talking about supply issues globally. What about power supply issues in Asia and China and Africa and South America? Because the politicians haven't set things up properly. And we're going to be in this period of the next year and a half to 2 years of a lot of supply chain issues globally. That's going to motivate and give momentum and a lot of courage for these politicians to take back from these foreign companies, and they're going to blame the foreigners. That's the pendulum cycle shift of deglobalization.
Yeah, interesting. Yeah, David's been so impressive because, like I said, I think we did an interview. It was definitely the first week they went public, and he's like, "We're going to do this, 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 and this." And then I talked to him 4 months later, and he's like, "Yep, we did all that. Now we're going to do this, 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 and that." You know, it's cool to talk to and really see someone that's that high level of professional. And so, kind of as we move, I was just kind of curious about Gold Royalty Corp because I mentioned your name, I think like the first week when we did it, when I saw you as one of the initial investors. So for those that aren't aware, that's Gold Royalty Corp, GROY. Now, when we move on here, right, like my goal here today, obviously, you become one of the top financiers and you're around all these Ricks and Dougs and Davids that have done so well. And so I really want to prepare the viewer to make the most out of this time in history, right? And so as we kind of move there, first of all, what would you say are the biggest things you've learned about making and keeping money, being around Rick and being around Rick Rule and being around Doug Casey and Eric Sprott, these guys that have built hundreds and hundreds of millions of dollars worth of successful investments, billions. What would you say are the important things for us to know?
So making it and keeping it are two different, once you've made it, marry right so you don't lose it. That's your biggest deflationary aspect is, you don't just lose half. Remember, there's the old Jewish saying, when the wife's pulling on the head of the cow and the husband's pulling on the tail of the cow, the lawyer's in the middle milking the cow. So you got to pay for that end, so you lose about 2/3 of your net worth if you go that route. So that's the number one thing. Make sure you study and spend time asking the right questions on who you're going to spend, your marriage with. So by getting to where you want, a lot of things I've learned, and it is huge pushback in the business because 85% of all the financings are done in jurisdictions that don't have swap lines. That I call them negative swap lines. So now, obviously, the bankers hate me because the bankers aren't investing their own money. They're investing your money or their clients' money. And they work off of something called B's and fees. So they get a percentage of the finder's fee and then they get broker warrants. And I sit there going, wait a second, you're telling me to do this, but you get to take 8% cash off the top and an 8% in broker warrants. But you're telling me I should invest in this with no warrants. And you're not putting any of your own money, but you're telling me to put my money in. What a bunch of bullshit, right? So what we do and how we become so big is the subscribers of mine and myself as the lead order will finance what I think are the best companies, and zero finder fees are taken from anyone involved. And it goes straight into the company because that extra 15% in fees can make that big difference for an extra drill program for the company. Secondly, there's this big misconception, Jake, that you need to invest in some, far off crazy jurisdiction where you need to bribe the politicians and you're going to find this major gold mine in the middle of the jungle and no one's ever heard of it before. There's no infrastructure and you're going to make 10 times your money. Well, I've proven mathematically through example after example that you don't need to take on that insane risk to get the big baggers. For example, Kirkland Lake's merging with Agnico. When I was the first person to publish on the merger of Newmarket, when I bought 10% of it, and Ross Beatty, when we went in and bought Fosterville, that was the number one performing gold stock, and it went from $1 to $65. And you didn't need to go to the middle of a jungle. It was already producing asset for on and off for 20 years. Copper Mountain, everyone who goes to BC goes up to the Okanagan. The highway was off there. That was the 20 bagger and became Canada's third largest producing copper mine. You do not need to take stupid political risk, stupid infrastructure risk, and way out of the money commodity options. So many people are investing in these areas where there is no mining law, there is no infrastructure. And if, uranium goes to $90 a pound or $190 a pound, this project might be worth something. And guess what? 20 different people owned it in all the different cycles. It's just recycled garbage. So you don't need to take crazy risks to make the big money. And that's why I'm backing David Garofalo, because these are guys that know how to do it. Remember, they're not Excel disc jockeys that just go and use consultants. He's built the guys who built mines. That this has been their career, and he knows how to finance these things in politically stable jurisdictions with infrastructure, with stable baseload power, so you're not going to have disruptions. That's where it's at. So for anyone out there thinking they need to go and ride a camel for 3 hours to get to this potential outcrop that has no infrastructure, no power, no rule of law, no mining rules, good luck. You're going to blow your brains out.
So then, what areas do you think are going to be the most investment sound? You mentioned Nevada and Canada. Are those the primary areas that you think are make the most sense at this stage of the pendulum that you described?
So remember, Canada's a big place, and there's certain areas in Canada that I wouldn't take my own kids to. Never mind, try to build a mine. So even in a big nation, you got areas that are just off limits, whether it's environmental reasons, First Nation reasons. There's many. So it's not like I can paint a broad brush, but Quebec is a great place. Certain areas of BC are great. Other areas of BC I wouldn't touch. Nevada is a great place. The Great Basin generally in the U.S. I think if you look at South Dakota and what's going on there, there's great potential there. You look at Utah, Idaho; those are great places in the U.S. to be. Well, are you going to go to certain areas of California or Oregon? No, like that's common sense. So you got to know where you're going. Certain areas of Australia are fantastic. Just like in Canada, you got to know where you're going. So for me, it's strictly positive swap lines in areas with infrastructure, baseload power, and rule of law that you can actually go and produce what you say you're going to do if you're able to deliver. Because so many areas, when the management do, the government changes the goalposts and the shareholders get screwed.
I like that. It's like, especially when we hear about like all your guys' stories, your stories or Rick's stories, then everybody, you get excited, and then maybe you get too cute, and that's how you end up losing.
Like,
and
that stuff sells newsletters. Like I've been there and done it. Like, like I'm driving on a highway I was with Doug Casey in an armored car wearing body armor, and I had to take a leak on the Western Zagros highway, which goes from Baghdad to Erbil. And we're on the side of the highway, and you get a flash. I was like, well, that's weird. And then the French Foreign Legion that we hired grabbed me while I'm still urinating on the side of this highway. Let's go. We got to go. And I'm like, what the hell? Like, get off me. And I realized this guy would probably squish me in 3 seconds. He's like Rambo. And I'm going, what the hell's going on? He goes, over there. We were on the Iraq side. The Iran side said, get the hell out of here. You've got the flash means. I didn't know what the flash meant. We're just a guy going to evaluate an oil well in Iraq. And he goes, we got to get out of here. Really? You're going to go build a mine there? Good luck. You're going to go do an infrastructure, and everyone who went lost their shirt on it, right? And that was in 2010. I started developing these theories of going, whoa, political risk. I got to evaluate because I went there and lived it and saw it. I don't think you need to take those risks to get the big rewards.
What out of this cycle, what metals or commodities attract you most, right? We've heard everything from gold, silver, cobalt, uranium, copper. What really has your interest?
Well, we were huge uranium financiers a few years ago. That's had a great run. I think gold is a great place to be. And the one that the mining world hates the most, but is going to be bigger than any other commodity, including oil, is going to be carbon credits. So you look at what's going on globally, gold and carbon credits, uranium, copper, you're going to do very, very well.
What do you make of when you see some of the G7 countries talking about all the electric vehicle mandates and renewable mandates, and they kind of throw out these times like there's only going to be electric cars on the road in 4 weeks, and they throw out these numbers like that. And I'm nowhere near as understanding of the natural resource sector as you, but I look at it and I go, has anyone done the math? I mean, where's all this stuff going to come from? And I wonder, what type of effect do you think that this G7 and, global push towards the electrification, the renewables, the solar and the electric vehicles will have on supply chains, commodity markets, et cetera?
Well, one thing that capitalism will always solve is the supply chain issues, just at what price. So there's lots of copper, it's just going to be at a higher price. You're not going to be building when back probably when I was younger than you, I was one of the founders and largest investor of Copper Mountain, and we were using $2 copper at that
Hmm.
time. You're not building any copper mines today using $2. You're probably not even using $3. It's just why, there's no point of bringing on the copper at $3 because the price is going to increase. And more importantly, even with let's say the Tesla and all the EV manufacturers double the efficiency of the components in its vehicle. Even if they double it, it's still triple the amount of copper in an EV than than an internal combustion engine. So you're going to need more copper. You're going to need more rare earths. You're going to need more, if you're going to be building all these EVs, does it make sense to be using coal and natural gas? So they're going to have to invest in the power grid, and you're going to have improvements. But remember, these are politicians, and in the West, it's different in China. They'll just kill you if you don't meet your mandate. But in the West, they live on 2 year. In Canada, it's turned into a 2-year mandate. Never mind 4-year cycles for the election. So politicians are going to do what politicians do, but don't for a second think that they're going to throw incredible amounts of money towards this, because it's a mandate that all of the nations of the West have pushed forward. And in a deflationary market, remember, the central bank fears deflation much more than inflation. They're going to cause this whole thing as the new, like, look, as Kerry called it, World War Zero. Doesn't that sound like, oh man, like, are aliens coming? And this is more dangerous than World War I and II. That they're going to put so much money towards this that it is happening towards it. Will it meet the timeline of some, politician who's no? It's gonna take longer. It's gonna take more money, but that's the direction it's moving. And what they're probably going to do is, as they don't meet the timelines, they're just going to tax the ones that haven't switched to the EV, or the utilities that haven't switched to green. And as a result, they're going to rely more on nuclear power, because nuclear power's essentially been the redhead stepchild of the power grid, and it's gonna have its time in the sun again. Everything is cyclical, but when you're dealing with government timeframes and mandates, remember the two things politicians do: they bullshit and lie, and they tax. Right, so you got to keep the reality into the investment horizon.
So, how do you think that this kind of natural resource commodities type of market will compare to, the one that Rick Rule talks about in the 70s and 80s, when, he had his big breakthrough in his career? How big do you think this one can be in relation to previous markets? And, what inning would you say that we're in here?
Um, I think the game has changed significantly from, Rick's era, because at that time it was go to where the gold is. So the big companies went and put all this money into exploration, and found incredible deposits that weren't harvested, right? That weren't built and mined. Move forward 40 years, and that money's been there. The mines and the industry, because it's so volatile, it's had its ups and downs, hasn't been able to attract the next generation of superstars in the mining and the engineer and the geologist, because, frankly, I remember when, my wife's a geologist and she did her MBA in finance. It was very few people doing that, because who wanted to go spend a year in the bush or 6 months in the bush, when computer programming and the investment world were attracting all sorts of talent and paying higher than the resource industry, and you had job security, and you didn't have to go to these far off places and live in a bush. So it attracted a much smaller people. So you got that factor. The other factor is you're seeing a major increase of political risk, government take, currency controls. So it's not as easy. Look what's going on in Argentina and Turkey. I cannot emphasize this enough. It's going to continue and keep growing because of the mandate of, the foreigners are the enemy. Remember what politicians do. They're going to always go gravitate to their local base. So you have that factor, which in Rick's enter. So I think you're going to have incredible areas, but you can't go to certain areas. Well, look what Chile's just talking about, passing a law on at a certain point, the government gets a higher rate. But when these companies built these projects, they didn't time frame that. So it's a change in the MPVs. Also, when you bring in carbon, how many of these companies have priced that into their modules? So look, the industry will take time to solve these supply chain issues, but there's no shortage of copper. There's a misconception, peak oil and peak gold and peak copper. Now, there's peak stupidity in the government. I'll agree with that. But when it comes to the commodities, the industry will solve it at what price. And when you're in a stable jurisdiction, you're going to get, it's almost the opposite of Rick's era in the 70s and 80s, where you had higher margins in these emerging markets. It's going to be the opposite. You're going to have higher margins in areas of existing infrastructure where the government can't change the law on you, and you have secure, stable baseload power rather than diesel generation. They're going to get taxed on carbon on all these aspects. So go to stable areas with infrastructure, long mine lives, low cost producers with management teams with skin in the game. Jake, it's not rocket science, but you just got to stick to a framework that works with the cycle ahead. And right now, try to avoid political risk in areas without the infrastructure, because CapEx is going to go wild. In my book, I talk about crossflation. You're going to have areas of incredible inflation. You're going to see areas of deflationary pressures, and we're seeing that in the software world right now. To build the mine, labor is a huge issue. Looking at Corp, it's gone from 2-3 weeks to get your assays to now 16 weeks. That's cost inflation. It's taking longer. It's taking more money. But getting tires, getting fuel, getting steel, all these aspects are costing more money and taking longer to get procured. So all these issues are going to work itself in the sector, ultimately raising the price of the commodity.
So you said you called it crossflation. You said some areas may see big inflation, other areas may see deflation, and you've kind of talked a little bit about that. So I'd love to know how you see this unfolding from a macro perspective, right? I thought it was so funny when I saw that the $3.5 trillion spendings in the United States, that the administration said that 3.5 trillion equals zero. And it reminded me of 1984 when George Orwell, he talks about how they're going to change the definitions of words and desensitize words. And I thought, you said there's maybe no such thing as peak oil or peak gold, but maybe peak stupidity. And I feel like maybe we hit the point at which the money printing is going to go to levels unimaginable. And we're seeing so many combinations of inflation and deflationary forces. Seems like everywhere has tremendous labor shortages, whereas we're seeing a lot of increases in prices. And I'm just wondering how you see this unfolding over the next year, 2 years, 3 years. What is the world going to look like? Are we going to keep moving towards this, things getting more expensive, but also having some of these deflationary shocks in labor? I mean, I know it's a big question, and it could easily be an entire conversation, but what's your kind of view on how this looks?
Well, we haven't even started on peak stupidity. You're going to see, if you thought the spending in the past 24 months was a lot, you ain't seen nothing yet. I talk a lot about that in the book and how it's going to be implemented, but it's going to be implemented with certain covenants. Whereas during COVID, it was just, let's survive. Now it's going to come with an agenda, and you can fight that agenda, or you could try to profit from the agenda. So each person has to figure out where they stay. The more screwed up it gets, Jake, that's the whole point of opportunity. The opportunities are present. It's whether or not you stand up and take the opportunity and profit on it. There's problems to be solved, not just in supply issues, but there are serious environmental issues. And if there is to be a trillionaire ever, it's going to be that person that solves a lot of these problems in the environmental side. On the supply side, on the mining side, I think there's going to be incredible cost inflations. How do you play it? Look, some of the stuff that we did in the uranium, and I remember 2018, 2019, people were mocking me for putting 50 mil into some of the stuff. Well, when you get a 10 bagger, that feels pretty good. But at the same time, now that it's becoming super popular, I'll give you a great story. A guy I know financed a piece of shit asset for 25 million. He had the bankers, he paid them 8 and 8, 16%. It was his birthday, and I sent him a note going, "Hey, congrats on that, because that asset's a piece of shit, but happy birthday. P.S. Don't spend any money on it." And he laughed. He said, "Thanks, and don't worry, we won't." Avoid those assets. Okay, these are recycled bullshit assets that the bankers went to their clients and said, "Uranium's hot, you got to get in it." And in the fear of missing out another hot cycle, they're financing crap. And it happens time in and time out in the commodity sector. Ask yourself, is this real? Are the management team real? What's going on here? And what was the reason for that financing? What are the use of proceeds? How much are the bankers taking? How much are the lawyers taking? How much are the accountants taking? How much are the service providers who put up no risk, but they absolve you of your potential risk, but they get paid before they do anything? And then you as the individual are taking on the risk. You got to know what you're investing in and position yourself. Am I going to invest in some moose pasture in Niger or Namibia that need $150 uranium because it's a out of the play money option on uranium? Why? It's going to end ugly unless you're on the screen every day. You might have a window of opportunity to make some money, but there's way easier ways to make money with way less risk and liquidity. You mentioned GORY and how you like it. If you take every one of its peers, take a Cisco, take Sandstorm, take Mavericks, take up all the other peers, add up their liquidity together, Gold Royalty still has more liquidity than everyone else combined. That in itself tells you that the market's saying, we believe in this and we're bringing volume to it. And it trades on what I call the big league exchange, the New York Stock Exchange. Elvis, the Beatles, Michael Jackson, they didn't play in some dives and bars underground bars. They played on the biggest stages in the world because they were the best. And if you want to make real money in this next commodity cycle, do you want to invest in some company that at best might trade on some underground dive exchange? Or do you want to be in the best exchange in the world, which is the biggest pools of capital, which is in the US? And everyone who's anti-US and anti-US dollar, for some reason, the gold bug community think that the US dollar is trash. Get on an airplane and travel around the world. You'll find out quickly how much the rest of the world would rather own the US dollar. For example, there's more $100 bills in Russia than there are in the US. There's a reason for that, okay? Because the rest of the world understands how crappy their currency is relative to the US dollar. And China isn't yet look, I love China. I love Chinese people. I'm in Vancouver, which has, big influence of China. But what's going on there? They have a lot of issues going on with power supply, and the world would be a much greater place, but there's going to be competition for resources globally. And you have two very different frameworks moving forward. We live in a G2 world that I highlight in my book. You have the US and its allies, and you have China and its allies. Putin is going to make some pretty big moves this coming winter. And if it plays out the way it looks like the cold winter, the UK is going to have to probably succumb to some of Putin's demands. Watch what Gazprom does, because you don't think Putin's going to heavily be involved in any of those decisions. It's getting to the point where the resources is a geopolitical issue. And that's going to continue to become more important moving forward, which was kind of forgotten in the last 10 years.
Yeah, I'd love to talk about that more, but I like what you said a lot, and it makes a lot of sense, right? Because when we hear all these success stories that you guys have, then you think like you just got to find the smallest stock and then wait, and then it's going to go really, really high. But like what you're saying, it's why do that, especially when you're in a market where there is so much need. And I knew that right away with David, like with how quickly they got under the New York Stock Exchange, and just like you can see that when you get behind the right professionals, you don't have to get too cute with it all when you do it right. And so GROY has been a nice look for us. But I want to ask you a little bit about that kind of like natural resource war. One of the things that I found interesting, is how much China has been building supplies of everything, whether it's pork or what have you. They seem very aware of what's taking place. And I was wondering if you could elaborate a little bit more on your opinions on how this geopolitical type of commodities wars plays itself out, because I think it's pretty intriguing.
Look, the Chinese administration is very smart. They're playing a long game that the American administration, for many presidents, not just the current one, have missed. So the Chinese are much more unified, much more organized, and I would say much more determined. Um, and it's not just on, these are commodities, for example, rare earths, how important the rare earth sector is. Um, the Chinese companies, obviously backed by the government because they always get that bid, have spent over $5 billion in the last 12 months procuring rare earths, the equivalent in the US, 14 million.
Wow.
Compare the difference. So China is looking at it going, and they're planning, again, the biggest advantage China and Russia has against the West, both Canada, Australia, America, Europe, is the politicians in where we are in the West are talking to their constituents about a 2-year cycle, the midterm cycle coming up, or the 4-year election cycle. Canada has been a joke. It's like a 2-year election. The administration, the individuals in power have not been as worldly. And I'd say China's done a much better job of organizing itself than the West. The current administration in the West, and I include US and Europe and Canada, are kind of living off of what their former administrations, generations before, have set into play. China is putting itself today in a stronger position moving forward. The question is how is this going to play out when the current administration gets either replaced or individuals wake up to it? Because the one thing, don't underestimate American ingenuity. I don't count America out, and it's far from this, this war, as they call, World War Zero. It's far from being over. It's going to be a multi-decade battle, and it's just starting. But resources are going to play a key component, as will technology, as will the environment. So all these different factors are playing in hand. You can't go wrong with putting some of your net worth into the gold and gold sectors, but understand your risk and don't go all in on anything. The biggest risk I've seen with, I would say, the younger generation that I've come across in the investments is they want to become Rick Rule or Ian Telfer or an Eric Sprott after 7 months of investing. Rick Rule spent 45 years and dedicated his life to this. Rick doesn't have a TV. He doesn't watch TV. He doesn't watch movies. He married incredibly well. Bonnie, he's married up, but the guy is incredibly hardworking. And I've worked with Rick. Where we were working late night at a dinner till 1 o'clock in the morning, and he's in the office at 6. He's incredibly disciplined. So all I could say is to the younger generation, don't make crazy bets where you think you're going to become a stud overnight. I've seen some of that play in this crypto, the whole, the eyes and all this stuff, and, Wall Street bets and, playing against the shorters. Don't confuse speculation with investing.
Powerful. So you said that you think we're in the very early stages of unimaginable levels of money printing, and you said that there's a strategy in which they'll employ it and agendas in which they'll employ it. And I was wondering if you could kind of peel the behind the curtain back on kind of how you see the iterations of that coming through and what you mean by it being attached to agendas. And I'd love to know where you think that.
So much of the media focuses on the stock market, right? And rightfully so. It's sexy. It's exciting. But the bond market is magnitude orders bigger. That's like the real market. You have to really understand the bond market to see where the stock market is going. The biggest growth of capital in the bond market since 2013 is actually what's called green bonds. It's grown over 17-fold, bigger than any other sector in the bond market, period. But with that comes the criteria, ESG, the environmental, social, and governance aspect. So it comes down to cost of capital, Jake. So if let's just say the copper company that I started 15 years ago, we had a capex of say $500 million. You borrow money at 10%. That's the going rate for a mid-tier asset with interest rates where they are, 10%. But let's say another company doing the exact same thing says, hey, wait a second, we're going to do this meeting the criteria of ESG. So rather than getting 10% interest, we're going to get 5% interest from the bond market. We're going to go net zero. We're going to have electric trucks, and 50% of our management and workers are going to meet the criteria preset. Which company is going to do better over the long run? Well, the one with the lower cost of capital. So that is a perfect example. And the companies that don't meet that criteria, $90 trillion just signed up to that criteria as we enter COP26. 90 trillion. that are going to play by that framework. There's still money that will not play that framework, but the cost of capital now is going up for those that don't meet that criteria. So now that 10% that used to be 10%, well, there's less money there. So the guys who are playing in that area want 14%. And now because there's 90 trillion, rather than maybe 5%, they'll do it for 3.5%. That ARB is essentially doubling your free cash flow. The companies that don't meet it, they're walking zombies because their cost of capital is too high. So you have to understand where the flow of capital is going and where they're going to invest. That's just one specific real-time example of what I see happening.
Interesting. So right now, there's a lot of crazy stuff going on. There's obviously a move towards centralization of power and, a lot higher level of, I would say, confiscation of freedoms and earnings. And there's a lot of things going on in the world that are a little scary and alarming. I have a 14-month-year-old daughter, and I look at it all, and sometimes I try to wrap my head around it, but without very much luck. And there's so much going on. So many people have lost their jobs in the last 24 months, and just quite frankly, their standard of living has decreased with how much more expensive everything's gotten. And we can go on and on and on and on and on. But I want to know, for someone listening here, how do you screw your head on right? And how do you take the most advantage of the opportunities right now and take care of yourself, your family, and not get so wrapped up in the things that you're coming down the pipeline, but a lot of them we can't control?
I think turn off your social media, number one. You're being told what to believe, and I was just telling my wife the other night, it's wild. It's as if these algorithms know exactly what you want to read, and it brings you into this rabbit hole, and it's not good for people. Get out there. There's lots of jobs. Perhaps you don't need to get a 4-year degree on literature or social history. Find your passions. Get up early, wash your face, take a shower. I would say shave, but I don't do that lately. But the point is, if you want work, it's there. The restaurants, you look at across the board, construction, mining, and it doesn't matter, race, gender. If there's a will, there is a way. So many people, for example, I get hit up all the time going, "Hey, Marin, do you want to mentor me? How can I get a job at your office?" And it's really simple. I'm very busy. Unfortunately, I can't mentor everybody. All you have to ask is, what can I do for you, Marin, to make your day better? When I became partners with Rick, I never asked him, "Hey, Rick, can you teach me?" I made Rick money, and I made him a lot of money. I made Doug Casey money and a lot of money. And then when they saw that I was a hustler and I would be there and don't miss flights and work hard and have unique ideas and get out there, then they go, "Hey, what about this and what about that?" And then they start investing their time. That's the key. What are you bringing to the table? Don't just go to a job and go, "Hey, I want to work." What can you do to add value here? Have a little bit of juice in life. I don't know if that's teachable. I don't know if it's broken. Look, there's a lot going wrong. I started out literally as a high school math teacher, and I saw a lot of the seeds were wrong back then. Because of the industry attracts, in the education program, there needs to be an overhaul across the board. And if it doesn't, the standard of living across the West will drop. I believe it will happen, and it's going to take time and a lot of money, but all the ingredients are there. And look, the innovation is here. You see the incredible innovation that happened to the oil patch when the industry broke the global economy. When oil got too expensive, people couldn't service their debt. High energy costs were the same reason. Today it's different, but secure, stable supply of energy is breaking down. And that's going to create so much innovation for those who want to capture the opportunity. So anyone watching this, ask yourself, if I like to use the analogy of a musician. Well, do you want to be a musician playing his guitar, singing a song in his mom's basement? Or do you want to get up on stage and maybe make it? You got to decide, what kind of person do you want to be? Do you want to go for it? Or do you want to just be a whiner and complain about life? And sadly, there's going to be both. in life, you can't change people the way they are, but try to read biographies, try to look at people you want to emulate your life after. Try to avoid the social media bullshit of the hit psychologically of the short term factors. It's all about delaying your long term gratification. I think if there's one secret I've learned in the business is I knew so many guys that when I started 20 years ago, they would buy a Ferrari or a Lambo and had expensive girlfriends and they would travel the world. I would invest. I was never flash, right? And you don't need to have, look me. I'm one of the biggest players in the game in finance. Most of my clothes come from Costco because I don't care, right? You don't need to be flash and what other people think. Find your own framework and stick to it.
Powerful. I really like that. I want to thank you for coming on. I know you're busy. We had you for about an hour. Um, why don't you tell everyone? You mentioned a couple times your book. I know you had a new one come out recently. We'll link that down below. But what's that one called?
It's called The Rise of America. It hit #1 on Amazon and Wall Street Journal in all categories. And it's a very different. It's a pretty tough. It's a tougher read than my first book. It's over 450 pages long, but it's the conclusion to my first book, and it gives you a real historical perspective of how we got here from a monetary and fiscal basis, how the resource sector from the oil patch to the mining got to where it is, what are the innovations moving forward, and then my take on where things are moving forward with an emphasis on each of the government frameworks, the demands moving forward from the power grid and the commodity side, and cost of capital and sectors that are going to be opening up. So it's not an easy read, but it's a read that if you invest the time, I think it'll provide a framework that has been very, very good for my subscribers and myself.
Awesome. So we will link Marin's website right there down below. Also, we talked about GROY Gold Royalty Corp. So I'll go ahead and link that right there down below. That's GROY, New York Stock Exchange, one of the companies that he invested in early on that coincidentally we were talking about early on our channel as well. And so we want to thank you for watching. Make sure you hit that subscribe, bell notification, all that fun stuff. Give us a comment right there down below. Help out with good old fashioned YouTube algorithm. A lot of the top channels in politics and economics pay YouTube to pop up at the top of the feed. So if you think we're doing a good job, you want to help us compete, easy way to do that. Hit that like, share this video, give us a comment right there down below. I want to thank you for listening and any final thoughts?
No, just get out there and live life. Don't feel sorry for yourself and try to do something positive every day.